Good morning, everyone, and welcome to the European crossover webinar. And we have seen the dollar recover a little bit here after this little dip we've had here. And let's go move this out of the way. So the euro just pared back enough. I actually covered my short, not for very much, but only for 5 pips. But I did miss the opportunity to go on and get long, and I even thought about that. I had a limit that I was working here, but I also had a limit that I was working much higher because I thought we could still make it for 1369. But I even dreamed about not waking up, but getting long on this dip, and looks like I missed the boat here. At least I got the limit covered, but the short covered for a whopping 5 pips. But I did miss this opportunity. I thought that well, you know what? On the 30-minute, we still dipped below that. But I swear I had a dream that it came right there to the EMA and it dipped just a little bit before it. I was able to get long. We moved higher. Well, so much for dreams. But that being said, looking over here with the euro, we did some Asian analysis, and the reason why I was thinking that, I guess, or maybe dreaming it, I guess I should say. Let's go here. What the heck? I don't know why it's not allowing me to open this larger. That I don't know why. Hang on. That's odd. I guess they've changed things. Look at this. They sure have. That's interesting. Okay, because we would just do it from right in here. But anyway, that being said, so okay, let's go and take a look at the dollar. We'll actually go on and move into the Asian analysis just quickly on this one. Moving into the dollar. Said the euro daily bullishly engulfed Monday's trading. Market remains in the sell mode with daily close resistance at 1360, the lower level of the zone. And we'll take a look at that. The 2-hour resistance comes in at 1369. Support comes in at 1302. Euro's not out of the woods, but an oversold bounce is within reason. So when we look over here with the euro dollar, you can see here where we bullishly engulfed. You can see right here. I always go with the body. Some people want to go with the entire range. It's not important to me. To me, the most important thing is the actual body. So after all these down days, and we had some resistance around this 1339-ish 40 right here. And we actually, one of the key things yesterday is we actually closed above that 1329 area here. But I really thought that we could make it right up in here, and we'll take a look at this. It's going to be right there at 1369. I'm not sure why that's not highlighted, if it didn't save the work. Yeah, I guess it didn't save it because I had that marked off here at 1369. It's coming right across, and I guess it's right here on the 2-hour chart. I know I'm not going crazy. I know I dreamed about entering that euro long, but I know I didn't dream about this 1369. But it's coming right across here. And I know I had that marked off, so that sure is nutty. But anyway, I'm thinking that we can potentially make it up here to 1369. Obviously, you can see this 1360, and one of the things we're referencing. I know in the chat room I was looking on the way up, looking to sell. I think it was 1356. Well, we didn't make it up there. I thought there was a chance they may try and squeeze them a little bit higher, but I think that we're going to go in and at least make it up here to 1369. I think we can stretch up that high, and so I actually already had even a limit working up there. And yeah, as I was saying, is I thought we could make a dip, and then from there we'd move higher. And I thought this will be a, they'll try and push it going forward. But anyway, that's what we're looking at here on the euro. And I said, I'll be doggone. I don't know what happened with that 1369 because I had it going right across here. But I believe we're going. I think I was even mentioned to a couple of guys in the room. I think we'll make it up to 1369. I was even saying, I don't know if it's going to be. Someone's asked me about it, and I said, I don't know if it's going to be tomorrow, which obviously is today, tomorrow or Thursday. But I think in time we'll make it up to 1369, only because it's so oversold. And it would just get just above this 59. There was some good touches coming across here at the 1369 area, and I'll be doggone, I don't know what happened with my work, but I had it over here for the 1369 area here, and I think we'll in time make it there. Let's click on here. If you look at that, that's actually comes in at the there's that 1369 coming across, but I know I had that marked off. I even had it marked off in red, so I don't know I'm going crazy, but maybe I am. But I think we can make it up there to the 1369. And not, like I said, I'll be doggone if I didn't dream here. And I remember this EMA being much lower here and saying, and the market had gone just beyond that and thinking, okay, that's where I'm getting long. And because I think we'll push up, I don't think it's going to be a screaming buy or anything like that. I'm just thinking that the market is it'll allow, and I was mentioning to some of the guys in chat room, it'll allow some of this oversoldness to work itself up. I don't think the euro's out of the woods by any stretch of the imagination. I think we can work lower, but it will allow the market to come back here, and then the market, just beyond this 38%, market gets a little bit tired, and then we start heading back, and then we see what it's made of when we try and test potentially just below 113. We'll see if that comes here to 4, but you can see us working hard, so I surely did miss. At least I think I missed the boat. Even if from a short-term thing, we at least make it back up here towards 38. So to me, I think I missed an opportunity there. But I was happy to cover this short. But anyway, it is what it is. So let's go move back in here. For the most part, I don't like to have limits working when I'm not awake, when they're just sitting there. I always think that something's going to come up, and next thing you know, you wake up and you're down 50, 70 pips. But it's not to be likely. But like I said, yeah, I'm thinking we'll probably make a move right up in here, maybe even take it out. So this was a good area here. I just felt like I missed the boat on that, but those things happen. Let's go on and quickly move into the news, and we'll come right back to the analysis because I have it for the dollar index. And we'll see where we go from there, and then we'll get right into the bias chart. So let's go and start with the morning bid. Spain's minority government is dropping hints that it will call an early general election if, as expected, loses a vote on the budget today. Two small Catalan independence parties on whose votes the government has been relying to pass legislation have so far maintained their blanket rejection of. The two most likely election dates are April 14, followed by April 28th. Prime Minister Pedro Sanchez knows that the last thing the left-leaning voters want, including even those who favor Catalan independence, is for the right to come back into power. The new twist in Brexit is a media report of an overheard conversation in a Brussels bar in which Theresa May's chief negotiator said he expected a major delay of Brexit if UK lawmakers don't make a reworked version of her deal. The report is generally being interpreted as an undermining May's resistance that there should be no delay, thus keeping her threat of no Brexit deal on the table. But an alternative reading would be that. If there was one thing calculated to put the real fights up at hard Brexiters, would be the prospect of a substantial postponement to a cherished project. In that sense, it might actually help focus the minds in favor of May's deal. In any case, reports of overheard conversations should generally be taken with a pinch of salt. The eavesdropper can never be sure of the context or sincerity of the conversation listened in. Sure enough, the government has simply restated its official policy this morning. And on to markets. Slipping deadlines and the deal hopes have buoyed world markets again, with U.S. President Donald Trump signaling he may push back the March 1st date for higher tariffs with China if enough progress is made in talks. Beijing this week, and also said he's likely to support a government funding agreement thrashed out in Congress this week that will avert another federal shutdown. The latest reports on Brexit, meantime, center on reported comments from UK negotiator Oliver Robbins that there will be a long delay. We've already covered that. Chief Federal Reserve Loretta Mester, who said on Tuesday that the Fed will chart plans at coming meetings to stop running down its balance sheet, the easing concern that the Fed would continue a $50 billion month reduction of the balance sheet until incoming data warranted it. CPI inflation numbers are released later on Wednesday. Wall Street stocks added more than 1% overnight, with the S&P 500 at its highest level of the year so far and above its 200-day moving average. The VIX volatility gauge briefly touched its lowest level since October. U.S. Treasury yields touched 2.7% overnight. European stock futures joined the global push higher with gains of about 0.5% ahead of the open. Sterling was higher against the dollar and euro on the indications that the UK government, at least privately, prefers a delay rather than the so-called Brexit on March 29th. And moving on to the dollar. Dollar takes a breather as U.S.-China trade hopes spur risk-taking. The dollar's recent rally on Wednesday as hopes for a United States and China trade deal spurred demand for riskier currencies. The greenback index's 8-day winning run came to an end overnight to push away from a 2-month peak. The New Zealand dollar was a standout performer in early Wednesday, trading adding more than 1.5% after a less dovish than expected central bank announcement. I was in the chat room and quite a few traders jumped in on this Kiwi. President Trump said on Tuesday that he could see letting the March 1st deadline go. Officials in Washington and Beijing are having a round of talks this week together to avert a partial U.S. government shutdown. There's optimism in the market. You can imagine that is why people no longer want to buy the dollar. Foley, however, noted that the euro-dollar exchange rate had remained stuck in a choppy range in recent months. There's a lot of evidence that the global growth is slowing and a lot of evidence to be suspicious of an end to the China trade war. We seem to have moved away from the dollar dominance over the last 2 sessions, said Michael McCarthy. And lastly, let's go and take a look here with gold. Gold week on the dollar. President Trump, we already talked about that. There's little detail behind Trump's comments. There's been nothing really strong enough to drive any strong conviction. The safe haven buying that we saw early in the month is a little bit more fragile. The dollar index, however, soared against its Asian peers and was marginally lower at 96.66. And investors also worried about Trump said on Tuesday he was unhappy with the deal struck by the congressional negotiators on border security that denied him the funds for the U.S.-Mexico border wall. And that pretty much does it there. At the bottom of the hour, we do have UK inflation data and PPI. Let's take a look here. Eurozone industrial production at the very top of this next hour. And then we do have CPI. Yeah, we see we're still pushing up a little bit higher in this euro. And what I think we'll challenge in here, and doesn't seem like a whole lot, but I don't like to chase something, even if it's only for a few pips. Most of the time, I don't. And yeah, it's kind of nutty. I even dreamed that thing coming back there. Because I think, like I said, I do believe that we will see the markets. We're just unwinding what is a very, very oversold market. And once again, if you look at it from daily, it still points to the lower 12s, although the key thing was from yesterday after losing that 1286, the day before, look at that, we turned around and closed right back and took this out and actually made a nice little recovery here. At this 1325. So the market, but you can see, look how wide the gap is in here. And we talked about this yesterday. It's not as wide as this gap here. There was a much wider gap when we saw it turn around. But once again, how much further can the market pull back? Well, the 38% makes a whole lot of sense. And we had even referenced that yesterday, and a couple of guys were referencing that also. Let's pull it up here on the 30-minute. Makes it a lot easier to see. As you can see, 1356 is a 38%. I think we can at least make it to there. But I think that we'll get beyond that and we'll come in. I think we can make it right there. You see this coming across here? That would be 1369 right there. And this is really frustrating because I know I marked this off here. Not that it's that big of a deal, but I know I'm not going crazy. That was marked off. The only good thing was I covered the shortages, and I woke up a little bit later than usual. But I'm a little bit ticked off about missing this opportunity to get long here, even though it hasn't been a whole lot up higher. But that really ticked me off because, anyway, I'm not going to talk about it any further. Anyway, let's go on and move on to the dollar index. Okay, the dollar index is edged back after 8 successive positive closes. A reasonable pullback to test late longs would be 96.30 level. Interim support comes in at 96.48. Upside resistance 96.94. So quickly we'll take a look here at the cash dollar index before we move right ahead with our analysis. So this is that key 97.09. We even got up as high as this 97.19. When we came in for the analysis, we'd already hit that and we're coming off a bit. Now, if you look at this bar on the daily, it's certainly not the same as the euro, although quite often they trade inversely. The euro, we actually did engulf the prior bar. We didn't do that with the cash dollar index. So what we're looking for here on the cash dollar index is a bit of a pullback. Let me move into the 30 minutes. I don't know what the heck is going on with my system here. This is crazy. Okay, potentially, I think we can make it down here. I posted this in the chat room, and this is the 96.48 right here. But we're looking, and we'll right here for starters here, right here this whole band. So we came in just below this band. I think we can go as low as the 96.48. But when we did the Asian analysis, now, I know some of this work is missing. It didn't save it because I know I put it in there and I had 96.30, and that really. Well, there's a nice 630. That one it did save. So I think that potentially here we can make it. I don't think it's going to happen overnight or whatever, but I think that we can pull back possibly before it's all said and done. This may not happen until Friday or Monday or whatever. I think we can come down as low as this 96.30, and you can see the touches coming across. I was moving over here, going across these body touches here, and there's case for 37 or whatever, and we have 48 in the interim support. But I think when you come across here and looking at closes here, this makes the most sense. So I think that we can push it as low as 96.30, because what may happen is as we move a little bit higher, and we talked about that, the market will probably want to exit. And I think this has the opportunity to test some late longs in the dollar, and then I think we could potentially push as low as 96.30. Once again, like I said, the dollar's on a buy, but if we do see that pullback, and then in turn, that may coincide with the euro going up as high as 1369. So let's go on and move into the bias chart and get started here. So where's going to be resistance here with the euro? So let's move in there. For today, we're going to go with 1360. You know, it's probably splitting hairs between 1369, but I think we can make it up to 69. I showed you on that. Potentially, if this market will really go on and push even higher, will be up to this. It's just 1380. But for right now, whether we get there or not, it's going to be 1360 for the resistance. The reason I'm thinking 1360 is because we're already headed up here to 1339. Putting it for even 56, I think this market could push beyond that. But ultimately, I think the best area to come in is actually, like I said, right there, coming in at 1369, coming in right there. You see that coming in right there. Eventually, we could stretch up a little bit higher, but I think that 1369 would be an area where then you could see the market pull back once we get there. Maybe pull back about 25, 30 pips at least, and then we'll see if we can make some more hay up in here. If not, then we could rotate lower. But you can see the momentum has definitely changed on a short-term basis here. So let's go with the 1369. This market is still woefully bearish. Nothing's changed for the euro. It's still a dump with their economic activity. And as far as support, you see, look, it almost made up to 1335. That really ticks me off. Anyway, support will be right there at 1309 to 38%. Let's go and move into cable. And cable's pushing lower. I just saw Amanda's comment, cable at lows pre-data. And we do have some inflation data coming up here. Let's see where we stand here with cable. We do have supported 28.20. I still like this 28.20, but that's still a long ways off from where we're at right now. Support on the short haul. I mean, it's key data, so you have to wonder. We're in a buy mode though on the exponential moving averages. To me, this cable is just tricky as all get out to trade. At least for me, it is. I can't get. This is one pair I just can't seem to get a good feel for. I sure am glad I haven't done anything with this in, as they say, in a coon's age. I just don't have a good feel for this market whatsoever. Other than when Blake was pointing out that it was moving hard, that was a good call there. But that's the only time I could see, okay, well, I guess it makes some sense. But for the most part, I'm just don't have a good feel on this one. We're going to go right there with 28.50, 28.50, call 28.55 for support on a very short-term basis. Overall, longer term, I like that 28.20. I'm just not sure if the wheels are going to come off the caboose on that. I think it's pretty clear what resistance is at. It's actually going to be 29.23 for resistance, 29.23. Look at how that euro's come off that. Not a whole lot, but if you're scalping, I mean, I was just leaving money on the table. It's really, so I'm bringing it up anymore, but. Let's go and move into the Aussie dollar. Well, we had our resistance at 71.42. We have made a nice recovery back in here. We got up as high as what, 71.36, pretty close. And that's a key level there, that 71.42. So that's going to remain the same. Support on the way down is going to be right there, 70.94. Nice recovery back here on this. It's almost time for UK data. Let's go and take a look where we stand here. There we go. Just came out and taking this dip a little bit lower here. Not a whole lot. And we're looking at our bias chart support, 28.55. Not a whole lot of movement. We're hanging around these lows, but relatively, look at this, very quiet trading here on the release of that report. UK inflation set to sink back to Bank of England target core, minus 0.80. And not really a whole lot of movement here. I would have expected a little bit more of a jolt. And we're looking for 28.55. Right there. There you go. Nothing. Quiet as all get out. Let's go on and move in now to the dollar CAD. We'll leave the cable here on the 5-minute here, just as that market continues to move a little bit. Nice recovery here in the CAD. When I was looking at it in Asia, when the dollar was, having a little bit of a tough time. We made this dip down here, right at 132. I haven't thought about it myself. I didn't do anything with it, but I looked at it and I remember, because I remember on the way down, if you remember when we had the report, I know Amanda was looking. I was also looking to get long on dollar CAD at the 28%. If I remember, it was 32.28 here, if I remember correctly, and the market only made it down to 32.31 or something like that, and then we came back up. And I remember Blake in the Face webinar, I think he was saying about getting long around 132. He thought same thing didn't reach his level. I think he was talking about 32.15, 32. So I was thinking about that last night when we came down here, and I thought, well, I wonder if that's just worth it, just to throw it on a long, just to see if it pops back up. Well, it didn't pop up a lot, but it popped up, off of these lows. We've come up almost 30 pips. So a little bit of pullback here. We're on a short-term sell mode, but overall, when you take a look at it on the daily, it still looks good. I thought we may be able to push up even higher. I'm surprised when the dollar index went to new highs that we didn't make this push towards this 33.54. At the beginning of the week, we were talking about that. Eventually, the potential is to move up to 34.18, the potential. But we thought we'd see some pretty good hardcore resistance around here. Well, we didn't even make a push even beyond much higher than we were. Now, we did get that good jobs report. There's that 32.12 we're referencing here. I think we had that as our bias chart support. Actually, no, we had edited it up a little bit higher as the market moved higher. I think we started out the week mentioning 32.12 as a good pullback area here. We're a little bit higher off of that, but yeah, probably should have gone and grabbed that 32. But it was in Asian trades, always a little bit quiet. And I thought the dollar could even pair back even further because I thought the euro might even pop up and that we'd be even stronger here in the euro this morning. But when we take a look at this, let's take a look on a 2-hour chart. Right there, support. 32.03. I thought there was a chance that the euro would have resolved itself a little bit higher. I mean, I guess that was good to get out of that little short, but I'm surprised that we didn't push even higher. I thought we could have come in this morning and really pushed this market higher. And I had a limit there working at that 32.69. And then I thought we'd pull back and there'd be a good little average overall and pull back to maybe like 28 or something from there. But we'll see. but it's still holding up relatively okay. Let's take a look as far as resistance on the dollar CAD. Resistance comes in right there. You see that? And this little medium-legged doji, that's actually coinciding right there. You see this across the board right there? You see? That's going to be 32.57. That's going to be a resistance. And just so we're clear on this, let's take a look at this. See that coming across? And there's that medium little, it's not even a medium-legged doji, but you can see here right there. Look at that. 32.57. That's going to get some good resistance. Short-term basis. Wow, look at dollar yen here, 1071. Remember, there's we have that resistance here in that area, the 63, 67-ish. We said we'd keep it at 63, if I remember correctly from yesterday. Yeah, you see, but the point that we got, it could go as high as 985. Well, you know, look at these S&Ps. Holy smokes, no wonder. You see that? Look at that. Unbelievable. Let's go and move into crude oil, which we generally just look on the 2-hour chart. Well, look on the daily anyway. Now we have had that nice recovery. Remember when we got here below 51.86, and we were looking for 2 consecutive closes below to trigger this movement lower here. And we got the one low. Let's move this up higher. Actually, we've made it up here to the 61%. Let's get this out of the way. Here's that low below that. Remember the key 51.85. Don't want to sound like a broken record, but remember how we talked about the 51.82. So this is where I came up with that. So the key was, remember, we got a nice bounce off of that and here. But the key is that when we got below here, we said we needed 2. We started the week. We need 2 consecutive daily closes below 51.85, and that would point us down to, for starters, 49.94, which would be the 127% extension. Well, we got that, but look, the next bar turned around and came right back up and closed above the key 51.85, which opened the door for us to move higher. There's no way in heck I would have thought it moved this much higher. But don't forget, look where the S&Ps are. That's what is giving it this boost. So let's move this out of the way. Good, strong recovery rally here, but a lot of it has to do with the S&Ps. There's still a concern with global growth, so we're going to see what's going to happen. I don't know if they're still biding their time ahead of these China trade talks and trying to squeeze every bit of good news out. Where can we go from here? Let's take a look. I think crude, to me, I think it's a hard market to trade. Doggone it. On a longer term basis. Hang on. There we go. God, look how choppy this is, all up and down like a yo-yo. Look at this. We could try and goose the stops and run up here for 54.28. The momentum has certainly switched in favor of this. We're going to go with this 54.28 in the possibility that they can goose the stops up here. So that's going to be our resistance there at 54.28. Support comes in right there. Well, actually, just a hair bit lower, right there. You see this coming across? $53.02. Boy, this is a tough one right here. Look at this here. To me, I would think that the market has probably found itself a little bit short and that they would make this move up in here. Let's see if we can close above this 53.62. But I think they'd be able to goose them up in here. Let's go on now to the dollar yen. We came back from the Asian holiday week, and they right from the get-go. I remember one of the guys in the chat room. I don't remember who was saying the Nikkei is running, and sure enough, it's continued. And obviously, with the S&Ps moving higher, here's that area that we talked about right here. If they could make it up here, 1092, but I think we have it marked on the 2-hour chart as 1095. But look at that right here. Key area right there, 10, actually it's 1090, 92, right there coming across. We have it marked on the bias chart as 1095. Let's look at the 2-hour chart. Oh yeah, there it is, 1095, right there. And you can see this coming right across here, 1095. That's going to be our bias chart resistance. I haven't done anything in the yen for a while. Probably good reason. Good thing I didn't. We talked about this the other day. Remember how you really want to, most of you guys already know, I'm just saying is, you really want to, it's better to let this momentum work for you. One of the reasons I started using the exponential moving averages, I mean, I used them from way back when, but when these markets, remember I would tell you, it'd be like 2 steps, 3 steps forward, 2 steps back. And I'd like to get the feel for the momentum taking us. And, we talked about this when you take out certain key areas here that the market wants to push higher. We talked about, remember we talked about this 1038 area here. And I said, hey, look, when it closed above, when we're looking at the close on the daily as well as the 2-hour, it allows for this market probably to push all the way up to, remember we said 1060 and in the chat room 1063. Well, you didn't come off a lot, but at least you came down to almost 30 pips before this market reasserted itself. And so, like I said, lots of times with these markets, they're not happy until they can go for a target. And especially remember how we closed, we took that one dip below 977 on Friday, but we got back above it and the market opened the market for us to challenge at least initially 1034, 1038 being a 2-hour resistance. But I said you don't want to force something, let it go to where it wants to go. And we were looking for 1060. We started coming up to this 1060-ish area. I think 1054 at the time was a 61%. We took a dip, not a whole lot, but the momentum is still pushing higher. And obviously with the S&Ps up in here, that opened the door. And we started out the week already with the Nikkei futures and them coming back and really going for risk on. We'll see if they can make it to that 1095. Probably would be a pretty good, decent little pause area to boot. Let's take a look at this on the daily also. Hang on. $10.77 is a 61%. I still like that 10.95. You could even make the case it could push all the way up to 11.38. Right there, 11. That's actually 11.36, but 10.95. But like I said, you got to let this market run its course. If you look at here on the daily EMAs, they've just turned bullish now from yesterday. So can't be standing in the way of a lot of these moves here. And boy, everything's all, everybody that bought on Monday come back here in Japan, they're all doing good. And so, you can see a bit of a respite, but the market still probably wants to resolve itself higher. And 10.95 looks like the initial one, although we could stretch up as high as 11.36. But it's going to be 10.95. On the support, and one thing about dollar yen, it's one of those currencies you just don't. It's tough to get that in the Aussie dollar. Our markets are really tough to get stand in the way of. They'll just keep going and going. Support's going to be right there at 10.12. 10.12 for support. You can make the case a little bit lower, a little bit higher up in here. It's actually, let's go with 10.36 on a very short-term basis. Boy, we've really pushed it for all she's worth on this one. Hang on. I traded dollar mex yesterday. I did well. And I told you we were going to start to cover that. I just wanted to get a little bit better feel for this. Don't just throw it on for the sake of throwing it on. And the reason I mention that is because this is another one that just when it moves, it moves. And I'm like I said, it's not my forte to hold on positions. I know Amanda is excellent at that. I just, stuff like this just drives me bananas. And why I want to move into a market where, you see more and more movement. But we've certainly resolved ourselves. Probably the way it's trading is a way a market would want to move towards a target and then ease back. Well, we've come up to the 61%. That makes a lot of sense here. We made it right here to 61%. We're probably going to ease back. We're going to go with this just as plain and simple as, okay, there's a respite area here. The markets have been sitting here trading a very tight range. And generally, we see something like that, then we're going to have to work towards a target. And that target was probably just as good as any right there for the 61%, which is 78.92. So we'll call that as our resistance. Usually I like to familiarize myself with the market before I feel more comfortable moving in and out. The dollar mex just went on really just on fibs, 38% one way and 38 and 50% going back the other way, and it worked out okay. Still left some money on the table though on that. Looking at for support here. A little bit of volume coming in right there. 78.57. Let's go 78.57 on this. Keeping it fairly tight, especially with these S&Ps holding up so well. We're actually running out of time. Look at how quiet the cable's trading. We're trying to get a little bit of a bid though, but trading relatively quiet. Looking at the dollar index, we talked about this at the start of the show. Had a pretty good run up here. I don't know why it's frustrating me. Okay, there we go. We talked about on looking at the 2-hour chart. Resistance is going to be right there, 96.93, and you can see that coming right across here. See there? That's going to be resistance right there. Actually comes at 96.94. That will be resistance. On a short-term basis, I think if they get anywhere close to that area, you'd see longs peel off. At least on a short-term basis, they may feel that, hey, you know what? After 8 straight days, you're trying to look at it in context and say, wait a minute, that's a lot. So you may see that pair back. Support, well, we're going to go with what we were talking about, the interim support, which is 96.48. 96.48. We made a reference to that. We'll go back here. Right there, 96.48. We think in time we could eventually make it down to 96.30 before we see a more meaningful bounce. But for right now, 96.48. Moving on to the gold market. Boy, are we holding up like a champ. Now the dollar has come off. We've been using this 13.15. Look, probably can going to move higher at this point, but until it does, it hasn't. So 13.15 is going to remain. That's been sitting there for literally for days, and support now. It's going to be, God, 1309 is just too close. It's going to be right there at 1308 for support. Let's go move into the bunds. Been telling you, keep an eye on these bunds. That helped yesterday, and I posted that chart a couple of times. With these bunds moving lower when they have, that's euro supportive. Notice how right here, now the euro's starting to slide back, and we've seen these bunds push up a little bit higher. I think it was Gregor that made a comment, reference in face with the same thing too. But we had a nice little pullback already in the bund, so maybe we can push back a little bit higher before we rotate back. Resistance on the short-term basis is going to be 66.12. Not sure if I'll make it up there. Support right here, 65.77. Moving on to the DAX. It's been a pretty good little run up in here. We had 11,204. We'll stay with that 11,204, and then on the downside, just a little bit lower there. It's a little bit better volume coming in right there. It's going to be 11,104. 11,104. Cable just a little bit slight better bid now. And euro, let's see what happens here. I still think the euro will eventually resolve itself a little bit higher, only because we're so overdone. Honestly, it'd be a bit of a surprise if we turn around and roll back lower. 1309, we have that, I believe is our bias chart support. If we got much below, it'd be interesting. I mean, if we broke below 113, wow, that'd be a pretty good little failure there. But at least for me, myself, I don't know why this, look how that's doing that. But if we were to get back there, that'd be quite a bit of a surprise if we broke below here at 1302. But to me, it just seems like this market will want to resolve itself higher. But we're going to get the bias chart posted into the room. And thanks for joining us here on the European crossover webinar.